Hello there, my name is Kathy Greven and I am joined today on the line with Bob Cunneen, Senior Economist with MLC. Hello Bob and welcome.
Hello Kathy and hello everyone. Thank you very much for the opportunity to speak today.
No problems. Well, thank you so much for what you're going to share. Hopefully we can defrag some of what's happening. But you've got an interesting topic with the global economics and markets, but mainly with the US presidency. Would you like to start off and hit us between the eyes with some information?
Thanks Kathy. Yes, so there's quite a few topical issues as I speak on November the 17th, and there are a lot of events that have occurred over recent weeks. So I'm trying to give you a snapshot of where things are and hopefully give you some positive signs for the future after a very tough year for the Australian economy and for financial markets and for those trying to find work at the moment. So let's end with a hopeful note towards the end of this presentation.
That'd be great.
So I might turn to the next slide, which is should be our legal disclaimer. So please bear in mind that I'm not going to give you specific advice here. I'm just going to give you some general observation about what is happening, and hence we can't give any warranty of the accuracy of my statements. So please bear that in mind. I'm just a humble economist trying to work out what the hell is happening, in essence. And if you need professional financial advice, please go and see Kathy.
That's me.
So we might turn to the next slide. And I thought it was important to emphasise the virus and how devastating the influence has been on global health systems and the global economy this year. And this is a very good chart that comes from data from Johns Hopkins University, and it's put together by the National Public Radio in the United States. And essentially what each colour represents is basically a continent. And it's important to emphasise with this virus how every country within a continent and every country around the world has had a different experience with the virus. It has been extremely devastating in a number of countries, particularly in Europe and the United States, but it has only had a very modest impact in Africa, which is the thin orange line in the middle of the graph. And that is very much a positive surprise.
Do we know why that? Yeah, do we know why that is, Bob?
Well, there are some question marks about the accuracy of the data, but it's also been a case of very limited tourism. So if we thought about the original outbreak from China, there was very limited tourism links between China and Africa. And most African nations shut down very early with the virus.
Right.
So they moved early and hard.
Okay.
And fortunately, that's allowed them to contain the virus.
Perfect.
Now, what's interesting about this chart as well is you can see there have been 3 waves with the virus. The first wave in March, basically the virus spread from China to Europe. And then we had the World Health Organization declare a pandemic as on March the 11th. And then we had a brief stabilisation, and then we saw the second wave. And the second wave in particular spread to the United States and Brazil. Then we had another stabilisation from late July to August. And as you can see, we are now in a third wave globally. And what is troubling about this is that we now have more than 500,000 new infection cases per day.
Amazing.
So the virus is still a threat to both our health and our economic well-being. So we need to be conscious of that. What's also important to note, as you can see, that the virus has re-accelerated in Europe. So Europe is now recording more than 200,000 cases per day.
Wow.
And with that, what you have seen is that there are now lockdowns in a number of countries, France, Spain, restrictions in Germany, as well as Britain. So this will damage economic activity in the current quarter, so for November in particular. And hopefully with the containment of that virus, we will start to get some better signs before Christmas. The other big news story is the United States. And in the United States, cases are running on average about 140,000 per day. Or in the last 6 days to November the 16th, we've had 1 million cases in the United States.
Wow. Wow.
Okay, so the virus is still wreaking havoc across both Europe and the United States.
Okay. Well, I can see that there's going to be some, I've seen your slides and I sort of know what's coming ahead, but I just want to just say that it's absolutely devastating as to, I know there's a lot of cases, but what about the deaths associated with it?
Well, the death rate is running above 2 million at the moment.
Wow.
But
okay.
the risk is with this virus acceleration that there is a delay between new infection cases and the subsequent death. And if the hospitals are overwhelmed,
Yes,
then it becomes even more tragic situation.
does indeed.
So essentially, we need a vaccine, and we need it very, very soon.
We do. But you've got some news on that, I see, coming up.
Essentially, yes. So the next slide, I don't want to be too pessimistic.
No, let's be optimistic.
Yes, we've had some very good news in the last week in particular. Important to note that Pfizer and Biotech, so Biotech's a German company, initially announced on November the 9th that they'd found a vaccine that's effective, 90% effective.
90%, yes.
And then we've had Moderna, just announced overnight, November the 16th, that they've found a vaccine that's 95% effective.
Which is awesome.
Yeah. And I just want to highlight with this chart the enormous amount of research that has been done. So as you can see, there are basically at least 67 vaccines under research. Pfizer and Moderna ones are just 2 of that effort. The important thing to note about the Pfizer and Moderna results are that they are in the last stages, the phase 3 of their trials. So phase 3 is when they test thousands and thousands of patients,
Yes.
roughly about 40,000 patients. And they start to get effective results of those who receive the vaccine as against those who don't receive it, as in a placebo.
Right.
And then they can judge the effectiveness of the vaccine.
Perfect.
Now, sorry, Kathy, did you?
I said that's perfect.
So that's very, very encouraging. However, I need to just a little bit of caution here in the sense that these are very promising results, but the vaccine has not had regulatory approval. So these results will have to be independently reviewed to
Yes.
test the safety of the vaccine. And it may be a process of 4 to 8 weeks before that approval comes through.
Oh, is that all?
And
That's great.
yeah, and then there is a limited availability of the vaccine. They need to ramp up production of that. And the test for both vaccines is you need 2 booster shots. So that cuts in half the vaccine's initial supply
True.
to the population. So as an example, with the Pfizer vaccine, they expected to have 25 million vaccine shots available to the population
Yep.
by the end of this year. But you have to bear in mind, in the United States, the population is 330 million plus. Okay, so that's less than 10%
Yeah,
of
drop.
the American population.
True. True.
So hopefully, as the vaccine gets approved, we can ramp up production and then the vaccine can be widely available. But we are still early days.
We are. And I believe that it's more the health care providers will be probably the first people or the first cabs off the rank that will receive this. Is that right?
That's exactly right. So the frontline workers in the health system,
Yes.
as well as the elderly, or those with a pre-existing condition who are susceptible to the virus, will be at the front of the line.
Yeah, as it should. Excellent. Well, those companies are going to be pretty lucrative, aren't they, to invest in?
Yes and no.
Oh.
So there will be an initial success factor involved, but it's a case where the governments will be primarily responsible for distribution.
Right, okay.
And accordingly, these companies will have to negotiate with governments.
Right.
So they'll be highly sensitive to the profit motive, if I could put it that way.
Perfect. Oh, well, as it should be, I think. Terrific.
Yes.
Lovely. Well, that is optimistic news. So how does that play out on the markets with this kind of news now and what you're going to share with us?
Well, this is a very encouraging development, and what you're seeing in share markets over the last 2 to 3 days in
Yes.
particular. So essentially since November the 9th, we've seen, rallies or gains of between 4 and 5% in
Yes.
global share markets because of this vaccine news.
Okay. Nothing to do with the US election outcome or potential outcome?
Well, that's also been a positive factor as well,
Yes.
Kathy. So we might turn to the next slide. As it's turned out, well, it's subject to confirmation because each state in America has to confirm the result,
Yes.
in what's known as the Electoral College. But at this stage, it looks like Joe Biden has been elected the 46th President of the United States. But it appears that no one's been willing to tell President Trump that he's lost the election.
Oh, I'll put my hand up. Dear, oh dear.
I'm only joking there. You can,
I know.
if you follow the Twitter lead from President Trump, he does not sound very content, if I could put it that way.
Sounds like a petulant child that hasn't got his way, which is a bit sad. You would expect that he would have a bit of respect for himself and move on, but anywho.
Now what's the markets? So if I just focus briefly on the US share market, they've received this positively, and their line of thinking is that the new president, Joe Biden, will face a Congress, as in the Senate and the House of Representatives, that is split between Democrats and Republicans.
Yes.
And the assumption of markets is that the new president will struggle to get through his policy agenda.
Oh.
And with that, it'll be considered a bit of a lame duck presidency and for Wall Street, this is good news because President Biden, when he comes in, had proposed to raise corporate tax rates from 21% to 28%.
I did see that.
Now, just to emphasise, I don't think that's a very wise assumption with the new president because, one, he's been around Washington for a long, long time, since 1973.
Yes.
He knows Republicans. He's actually been invited to give the eulogies at 2 Republican senators' funerals. So that's a rare invitation, let me tell you. So, but the news, he will be the oldest president
in
American history.
When I read that, he's much older than our, what was the name of the president? Sorry.
Ronald Reagan?
Ronald Reagan, that's it. So
Yes.
older than Ronald Reagan when he resigned, he left office. So, yeah, amazing. But, these days we are, even though we're ageing, we are living longer and living better longer.
Exactly.
So age is just a
number.
Age is just a number.
That's right.
Perfect.
It's just a state of mind, Kathy.
We keep telling ourselves that, Bob. We'll get there.
So I might turn to the next slide. Okay, so this is a very detailed slide, but so essentially the new president's plan, and the key point was the top line there, as in raising the corporate tax rate from 21% to 28%. So what that would have done is when President Trump came in, when he was elected, and in 2017, President Trump and the Republicans lowered the corporate tax rate from 35% down to 21%. And the new Joe Biden proposed to raise it from 21 to 28. So taking back half of Trump's tax cut.
Yes.
Now, that would have had an impact on corporate profits, would have pushed down corporate profits after tax, and therefore was seen as a negative to Wall Street.
Right.
Okay.
Yeah.
The other aspects were he was prepared to raise income taxes for wealthy Americans, those who earn more than $400,000 per year.
Yes.
Tax capital gains and dividends. So, in a nutshell, this was seen as a negative for Wall Street. The other part of his agenda, apart from raising revenue with taxation, was to spend more. So more spending on education, making universities tuition free, more spending on infrastructure, so more spending on electricity, power networks, clean energy,
Fantastic.
and the like.
He's very
and
much
more spending on social housing.
Yeah, he's very much a big global warming kind of guy, isn't he? Yeah, well, addressing that issue.
Yes, so very much a climate change that completely reverse President Trump's agenda.
Very true. Very true. And an interesting point is that with the Americans, they actually pay capital gains tax on their private homes as well. So that's always interesting to note that versus Australia, where it's an exempt asset under our taxation rules. So I always found that interesting that Keating borrowed the capital gains tax legislation from America. Myself, just a little fun fact.
That's a great point. So essentially, Joe Biden his plan was a high spending, higher taxing platform. Now, if we turn to the next slide, what we can see in terms of the results so far is that essentially, you look at the top line, as in the Senate control, you can see the Democrats have got 48 Senate seats, as against the Republicans with 50 out of a total 100-seat Senate.
Yes.
Now, there's 2 Senate seats still to be decided, and they are in Georgia And because of a technical aspect in Georgia, they've decided to rerun the election because no candidate got above the 50% threshold required.
Right.
Now, what's really curious about this is that the Democrats had a chance of winning those 2 Senate seats, and then they would get to even with the Republicans in the Senate.
Yes.
Now, when it's even like that, the vice president, so Kamala Harris, after January the 20th, will get the deciding vote.
Yes. She will.
Okay, so potentially the Democrats could take control of the Senate. So that's still a possibility.
Yes.
Okay. In the lower house, the House of Representatives, the Democrats have got their majority.
Yes. Well.
So it's still up in the air, still to be decided. January the 5th is when Georgia holds the election.
Right. So Biden technically takes over on the 20th of January. So that doesn't sort of leave much time, does it?
No, it doesn't. And that's one of the issues currently being played out is the transition between the current president and the new president.
Yes, that's right. So that in itself is a market issue, because I know markets tend to sort of drop a little bit over Christmas because of the Christmas break, and who knows what's going to happen with COVID. But how's the markets then going to impact on this news?
Well, this is a possible negative to Wall Street. So if the Democrats do manage to break even or get to 50 against the Republicans, then potentially that the tax rise comes back on the radar screen.
Right. Okay.
So that's something to watch.
That is, yeah. Watch this space. Terrific. Oh, we've got so many things to watch as well, so, you know.
That's right.
Very complicated.
I think we all need Christmas to come early to have a break.
I know. I think we've just got too many things going on. I had a look at this year and all the things that have gone on. It's just amazing how much we've had to all deal with. So this is just another barrel, another carrot in the basket. So with moving on then.
Yes,
what's
we might turn to the next slide just to make it a little bit more topical. So at the moment there's a bit of a debate. There's a stalemate in the Senate about providing more stimulus to the American economy. So the Republicans under Mitch McConnell, the Senate leader,
yes,
are opposed to providing more stimulus. Now, at the moment, we're in a very precarious situation with the US economy because, one, you've got that virus acceleration.
yes,
Two, you haven't had the vaccine. And thirdly, a lot of the stimulus measures that have been passed since March are now starting to roll off. They haven't been extended. So the Republicans, when they look at what's happening in the United States, they would say, they'd look at the chart on your left-hand side,
yes,
which is the American budget deficit, and they would say, well, the American budget deficit is currently running about 16% of our nation's GDP. So GDP is the total amount of income and production produced per year. And they would say, this is the largest budget deficit we've seen since World War II. We've provided enough stimulus in the system. And when we look at the chart on your right-hand side, when we look at government debt as a percentage of that GDP, you can see how it's accelerated.
It's a straight line.
135%.
I know, it's a straight line. Unbelievable.
Yes. So basically, Trump's run his the government budget like he runs his casinos.
all
A
on,
big bet.
yeah, all on black on the roulette wheel.
That's probably been a bit cruel, so I better refrain from that little joke.
So
Anyway, so
as a
that's the argument that Republicans put forward for holding back on stimulus. So we are in a very awkward position at the moment.
We are. But can I just ask, with that straight line, what correlation that might have with what the Australian government has done with its stimulus package and its debt, etc.? Has it got...
That's a great question, because what's important to note about Australia is that we came into this crisis with very low government debt. Our government debt was essentially 30% of our nation's GDP.
Mm-hmm.
Okay, as against the US, where it was about 105%.
Yes.
And what has basically happened is that we're going to 45% this financial year.
Right.
And at the end of the next financial year, probably closer to 55%
Okay.
of our nation's GDP.
Not too bad.
So we're at least half what the United States is.
Mm.
Similar story to Europe as well. We're at least half of what they are.
Okay. Cool. Well, that's good to know to
Might
put it in
turn to the
perspective.
next slide.
Yep.
Okay, so what's happened in share markets this year?
Mm-hmm.
So to say it's been volatile is the understatement.
Yes.
So
when's a good time to buy? That's it's in the past, really, isn't it? So challenge.
yes, about March the 22nd of this year was about the time to buy. But let me tell you, no one was buying.
I can imagine. Well, we've never experienced anything like this before, so. Mm.
Yes, it had echoes of the 1987 stock market crash, but this was very much a very unique experience.
Yes.
So what you can see is the collapse in March, when the market in the US and Australia basically fell close to 30%.
Yeah. That's it.
And then you've seen this recovery. But the US market has recovered much more strongly than Australia.
Has indeed. But that would be
And
because
the US
of...
market last night went to new highs.
Yeah, that would have been because of Trumpy's spending, I would imagine, that sort of accelerated some of that, would you say?
Yes, the fiscal stimulus has been very, very supportive. It's also the technology sector. Now, all the investors are piling into technology shares, and I'll come to that a little bit later.
Okay.
But the third factor has been the news of the vaccine. That's been a positive as well.
Yes.
And the market has been anticipating a vaccine for the last 3 or 4 months.
Yes.
And what's essentially happened is the news now is validating that expectation.
Which is a good...
Markets run ahead of reality.
Yes.
Sometimes, and then reality catches up. Now, Australia's case, it's been a bit of a struggle this year. So we are essentially still in negative territory. We started the year at roughly around 6,800. So it's been a difficult year, but you can see that we're slowly getting better.
Yes. Yesterday we were up a little bit. Well, we were only down a couple of 100 points, I think, from that.
Yeah, well, it's been surprising in the last 10 days or so, we're up nearly 10%.
I know.
So that's excellent. So if we turn to the next slide. Okay, and this is a slide that I find astonishing, and I'm still trying to come to terms with it. So what it shows is, if we look at the darker blue line,
Yes.
This is the market capitalization of Apple. So think of your iPhone, and some of you may have a laptop or a computer made by Apple.
Yep.
Now, the market capitalization is all the shares outstanding times their price. And so it's essentially the market's valuation of Apple. Now, in March of this year, Apple had a bit of a setback. It fell nearly 30%.
Wow.
And since March, its value has gone from 1,000 billion American dollars to 1,900 billion.
Wow.
Okay, you can see that orange arrow?
Yes.
The big rally in Apple's market value. Okay. Now, just to line that up against the lighter blue line, that is the top 100 stocks, the total 100 stocks on the British share market. So that includes some names that you're familiar with.
Yes.
Your British Petroleum, your Shell, your Unilever, Hong Kong and Shanghai Bank, AstraZeneca, and the like. So 100 stocks on the British share market are now worth the equivalent of Apple.
Just Apple.
Just Apple.
That's a sweet apple, isn't it?
It is indeed. Okay, so the question is Apple reasonably priced?
Well, do you think
Now, I'll leave it to your viewers to decide.
Okay, yep, all right. We could debate that, couldn't we?
And I'll speak in a broader sense about the American share market in the next two slides.
Okay.
Okay, so we'll leave Apple aside and we'll move to the broader American share market in the
Next slide. Yeah, perfect.
Okay, so now this blue line represents the top 500 stocks on the American share market. The index is called the Standard & Poor's 500, or S&P 500. And the blue line here represents a measure of forward price to earnings. Now, what is that? That's how many dollars are you paying now for $1 of corporate profits in 1 year's time?
Yes.
So it's got a little bit of a forward element or expectation element to it. Now, ideally, you want to buy low and you want to sell or reduce your exposure when it's high.
Yes.
So we go back to the GFC, okay, on the blue line, we go back to 2007, 2008, and early 2009, you can see the blue line went from 15 down to 10 on the forward price earnings ratio.
Yes.
Okay? And that was the time to snap up American shares.
Yes.
Now, if you follow that blue line to the end point, now currently the forward price earnings ratio is 21.6.
Huge.
Right. Now, that 21.6 is well above the 10-year average of around 15. So that tells us that investors are paying a premium for the American share market. Okay, so that's an optimistic expectation.
True.
And pricing. Now, that's the negative side of the coin. I'm going to give you both sides of the coin here,
Okay.
so that your clients and investors can decide which one's appropriate. Okay. Now, just think of that blue line now, and in the next slide, what I'm going to do is I'm going to go 1 divided by 21.6. So it's what's called an inversion.
Yes.
Will give you the blue line in this chart.
Right.
And the blue line here is what's known as your earnings yield. So how much are earnings as a percentage of the price you pay.
Which is great.
And that shows you the earnings yield is now 4.6. So 1 divided by 21.6.
Yes.
Okay. Now, that's very, very low. And if you run your eye back to 2000, when the blue line was at a similar level, that was the top of the American share market just before the tech wreck or the dot-com bubble burst.
Yeah, I remember that well.
Okay, so you'll be very, very nervous.
Mm-hmm.
Okay, now the bulls on Wall Street, the positive people, will say this time is different because of the red line. The red line is the real bond yield.
Right.
So think of this. This is the bond yield you get before you get inflation compensation.
True. True.
Okay, so it is it's known as an inflation index bond. And what you've seen over the last 20 years, you see how that red line has gone down?
Yes.
Okay. So at the moment, the American 10-year real bond yield is minus 0.8%.
I know, it keeps going down.
Keeps going down, exactly. And this is one of the reasons why bonds are generating very, very low income.
They are indeed. Very sad.
So what the positive people on Wall Street would emphasise is, if you look at the gap between the blue line and the red line, this is known as the equity risk premium.
Mm.
So 4.6 on the blue line minus 0.8
Yes.
gives you a gap of 5.4%.
Yes.
And that says that equities are reasonably priced because they're in line with a very long-term average.
Right.
So it's comparing the share market, the blue line, to the bond market, which says that the share market is reasonable.
Okay.
Okay. So that's quite a hard thing to get around first time.
There's it's quite intense, and there's a lot of mechanics behind it. And
Yes.
yeah, see me afterwards if you're not sure what that means, I think.
Right. So I might turn to the next slide rather than get a headache.
Good point.
So the next slide is just what's happening in the US economy at the moment.
Yes.
And the good news has been a recovery in retail spending. Okay. So if we go back to the virus crisis hitting in March and April, you can see the collapse in the red line, retail spending collapsed.
Yes.
People stopped going to shopping malls and buying cars. And basically from May, June onwards, you can see the recovery.
Mm.
And it's interesting, retail spending is now above where it was in February before the virus. Okay.
That's pretty
So big tick there.
Mm.
However, because the the Senate is still debating about fiscal stimulus,
Yes.
and we've got the virus still raging across the United States, there is a downside risk to that red line.
There is.
Now, the blue line is industrial production, so think of this as producing cars and steel and cement. What that shows is the American manufacturing sector has not made a full recovery, okay, which is quite interesting.
It is.
And that just shows you the varying performance or the differences across industry sectors
And
the experience with the virus. Some sectors have done okay, and some sectors have struggled, and some sectors are in deep recession, which is your hospitality
yes,
or,
tourism
industries
very
and
much
travel.
so. Yeah. Very true. And that's probably why we can't get cars at the moment either. Well, we've
Ah,
got to wait forever and a day.
Kathy, have you ordered a Ford Mustang?
Shh! Don't say anything, Bob.
Right,
No,
so we'll turn to the next slide. I'm just conscious of time. So
great.
how are we going for time, Kathy?
Probably another 15 minutes, Bob.
Okay, so I'll be quick through these next few slides. Okay, just to highlight, there is a recovery in the unemployment rate in the United States, that green arrow.
Yes.
But bear in mind, with the virus, the unemployment rate in the United States went to 14.7% in April.
Right.
So that was the highest unemployment rate since 1940.
Wow. I would have expected it to be higher, but there you go.
Yeah, but bear in mind, Kathy, the starting point was the unemployment rate at the start of this year was 3.5%.
Oh, well, okay. Okay.
Okay,
That
so
makes
that was
sense.
the lowest unemployment rate since 1969.
Right. Wow. Okay.
So turn to the next slide. Okay, so this is the China slides, and I'll just briefly go through this. The chart on the left-hand side shows a China recovery. The blue line is industrial production, and the red line is retail sales, and you can see how they're both close to where they were at the start of this year
Yes.
as well.
Yeah.
So that's a positive signal in China because they've done much better apparently in containing the virus. Okay.
Also,
And the
they
chart
say.
on your right-hand side just shows you, despite the collapse in the economy at the start of this year, real GDP or economic activity has bounced back
Yes.
in the third quarter. And this is because the red line in the chart shows you that credit growth, this is bank lending, has remained consistent.
Consistent. Yeah.
So the Chinese government has told the banks, lend money, keep lending, don't worry.
Yes. Which is good.
So we might turn to the next slide.
That sort of correlates a lot with the Australian government and telling the banks, etc.
Yes, it's sort of like the word behind closed door.
Correct.
Okay, so what's happened with interest rates this year? So the red line is Australia's interest rate, the cash interest rate, and the blue line is America's, and you can see they basically collapsed towards zero.
Yes.
Okay? So this is why you're not earning anything in your savings account.
And those retirees are finding it tough. Those self-funded retirees, but at any rate. Yes.
Now the next slide just shows you yields on term deposits. So here's the struggle to generate income.
Mm-hmm. Yes.
So what you're looking at the red line at the moment. So this is up until the end of October. The 1 year term deposit was roughly about 0.75%, but it's probably gone down to closer to 0.5%.
Right.
In the last week or so. The black line is your corporate bond. So if you wanted to invest in a corporate bond for about 3 years, you're struggling to get 1%. The incentive is, but you must be prepared to take the swings and arrows of share market movements and put your capital at risk,
Yes.
is Australian shares.
It is.
So I'll just put that in as a comparison, a dividend yield of 3.6%.
Yes. It's so hard to get any value at the moment out of anything but.
But you can see over the last 10 years, this progressive struggle to get any interest income out of term deposits as well as corporate bonds.
Absolutely.
And unfortunately, in the case in Australia, that'll be a struggle for the next couple of years because the Reserve Bank has given indications that they're prepared to keep interest rates at these sort of levels for at least the next couple of years.
Right. Okay. That sort of begs the question then, if unemployment were to suddenly rise, say, hypothetically after the government stimulus packages falls off in March, to more than double digits, will they still keep it low?
Well, they will keep it low. A higher unemployment rate will maintain downward pressure on interest rate.
Okay.
So that will be a challenge.
Yes.
And you'll see that the Reserve Bank has emphasised that they want to see employment improve and the unemployment rate come down
Right.
before they can contemplate raising it.
Okay.
That's the key criteria. Now, just to show you what's happening in the Australian economy in terms of some of the economic indicators, the chart on your left-hand side is car sales, so new car sales. Okay, so this is Kathy been shopping around for a new car.
My Mustang, that's it. Thank you.
Basically, you can see with the virus, the collapse in March and April. And then we have the first green arrows, says we're going back into recovery, May and June. And then you had the virus outbreak in Victoria.
Yes.
Okay. The good news is in October, car sales picked up again. Okay.
Yes.
So the time to bargain with car sales, a new car, is probably passed.
Pass.
Okay. But it's actually interesting in this environment, what's gone up is used car prices.
Oh,
So
okay.
because of the virus,
Yes.
people have been avoiding using public transport,
True.
and people have been buying their second and third car.
Oh, wow. Okay.
So just to capture what's happening on public transport, again, this is, think of buses, trains and trams in the 3 eastern coast cities. So unfortunately I don't have Adelaide data. But again, you can see the collapse in March and April. And then we had a bit of a recovery for a couple of months, and then we had the Melbourne virus outbreak, the darker blue line.
Yes.
And that set back the recovery. Now, to illustrate that things are not back to normal, okay, I'll give you a personal anecdote. I catch the bus in a couple of days a week
Right.
in Sydney, and normally if you caught the bus prior to February, prior to the virus, it would be full, 7 o'clock bus would be full, 50 seats been occupied. But you get barely more than 15 people on the bus these days.
Wow.
Okay, so you're only running at 30%.
Right. Well, that's got to hit the operations of the public transport system.
Exactly.
Yeah.
Exactly.
And the road. I mean, I suppose the tolls will be up, won't they?
Well, tolls never go down, do they?
No, it's good investment, that.
Yeah. So I might turn to the next slide. Okay, so what's happening in terms of employment? You can see how the blue line collapsed with the virus again.
Yes. Yes.
Okay, we lost 875,000 jobs between March and May. But the good news is to see how that blue line has bounced back.
Yes, it has.
Okay, we managed to recapture 400,000 or so jobs, but we're not back to where we were at the start of this year.
No.
And the red line is hours worked. So those employees, how many hours they put in, that's also
Reduced.
hasn't made a full recovery.
No. And I do know people are sacrificing hours to maintain and keep the jobs as well, so that more people get employed, but not necessarily as many hours.
Yes, so this is a critical issue for Australia. It's what's known as underemployment.
Yes.
So underemployment is those part-time workers who want more hours. And in the notes next to that chart, you'll see the underemployment rate is 11.4%. So you add that 11.4% to the 6.9% of Australians who are unemployed, you get 18.3%. So nearly 1 in 5 Australians are struggling to generate income
That's right.
from work.
That's right. It's pretty devastating.
It is that. We turn to the next slide, house prices. Okay, so
I quite like this one because we're sitting pretty, actually, for a change. That never happens.
yes, it's Adelaide. You can see you've made modest gains over the last 7 or 8 years, but it's like the old Greek story, the tortoise and the hare. Okay, Sydney and Melbourne have been the hare, and what you're now seeing in Sydney and Melbourne is house prices are starting to fall.
Very true.
Now they're rather high. We are now dealing with a situation where a lot of young people are not in a position to buy a house, obviously because their employment situation is precarious.
True.
They are having to stay with their parents a lot longer, obviously. We're also going to have lower population growth with lower immigration over the next couple of years.
Yes.
So from that point of view, there is a significant downside risk to Sydney and Melbourne house prices. So clients and investors should be conscious of that downside risk.
True. I mean,
Sydney, Melbourne.
one of the big strategies I think a lot of people in Sydney and Melbourne have is that they downsize to places like Tasmania and South Australia for their retirement. Selling out big so they've got more than enough in their retirement to sort of live the lifestyle that they choose. So that might have an impact, but I don't think long term.
No, it will have an impact, and what will also happen as well this year with the virus crisis has been a lot of those who have got high mortgages in Sydney and Melbourne have started to realise that they don't need to be close to the central business district. They can work from home.
Very
Technology enables that.
Yes.
So some of the premium in the Sydney and Melbourne market reflected that perceived need, and
Very
that
true.
probably is a big question mark.
Yeah, good point.
So we might turn to the next slide. One thing we need to be conscious of is that there is a large loan deferral program. So borrowers have been allowed to suspend repayments because of their financial situation
Yes.
since March. Some of that is now starting to roll off. Banks are calling their clients saying, can you repay? Or if you can't repay, maybe you need to restructure.
Yes.
Maybe you need to sell assets. Right? So there's some difficult conversations being taken place. Now, just to put this in context, if we look at the bottom right-hand corner,
Yes.
is that if we look at housing loans, so around 7% of housing loans are in loan deferral programs, and nearly 11% of small to medium enterprises are in the same situation. Okay?
Yes. I think this is
Now,
a space to watch.
It is. This is a risk. I don't want to be too pessimistic here because if you look at the chart, the recent data shows that those levels have been coming down, the percentages and the amounts.
Yes.
So that's good news, but we are still in a precarious situation with this loan deferral program.
Yes, I agree.
Yeah. And one thing that is a potential concern is nearly half of small business loans, the small business owner has pledged their house as collateral.
Yes.
Okay, so there's a difficult position where some small business owners may be compelled to sell their house to repay their debts.
That's true. That's true. Challenge.
So I might turn to the next slide, please. Okay, so let's try and end on a positive note, Kathy.
Yeah, good stuff, Bob.
Okay, so The good news with the federal budget in October was it was more supportive, even more stimulus was provided, primarily in terms of income tax cuts for those earning between 40,000 and 160,000. So it's roughly worth $2,000 to $2,500 per year, or $40 to $50 per week.
Yes.
So that's helpful in terms of cash flow for those who are employed.
Yep, and I think...
And also to note is the government provided investment allowances to encourage business to invest, bring forward their investment.
Which is perfect, yes.
That all helps, as well as a job wage subsidies
True.
for higher workers.
Very true. And I think that's part of what's driving some of the market at the moment, because people are spending, they've got a little bit more money, so they're feeling a little bit more confident.
Yes. So we're starting to see that pick up. And if we turn to the next slide, just to try and... Okay, so this is Australia's budget situation, and I'd emphasise here, you know, we are going to have a very large deficit.
Yes.
11% of our nation's GDP this year. But bear in mind, our starting point at the end of last year, we had basically a balanced budget. Okay, so
not bad.
We have been very conservative.
I agree. Can I just ask a question in terms of when we had the GFC, because we were pretty much balanced prior to the GFC, and then after the stimulus packages of the government of the day at that time, we went into deficit. What's the difference between those two? Do you remember?
Well, in terms of you can see in the chart there, in terms of the deficit move, you know, we went from nearly 2% of our nation's GDP to 4%. So that was a change of 6%.
Yes.
In the scheme of things here, we've gone from 0 to 11%.
Wow, yes.
So nearly double the size.
Yes.
Well,
what's not fantastic?
Yeah. So it's been much larger.
Yes.
In terms of the scale of stimulus, and because the downturn in Australia has been much bigger than what happened during the GFC.
Yeah.
Now, we were fortunate in the GFC. On the GDP data itself, and that can be sometimes a bit of an artificial measure, but back in 2008 and early 2009, we didn't actually have a recession. We didn't have 2 consecutive quarters where the GDP fell. Okay, but as you can see with this experience with the virus this year, in the June quarter alone, our economy fell 7%.
Yeah.
Okay, so in magnitude, this has been the worst downturn since the 1930s.
So even surpasses the recession that we're supposed to have had through Keating's leadership and treasury? Yes?
It does, yes.
Wow, okay.
So there you were looking at an economic downturn where the recession was order of magnitude is probably about 3% of GDP. Oh. So this is like 2.5 times that.
Pity we can't have the same interest rates though. That's a challenge. Yes, I'm just trying to find value where I can for my retired clients to invest their money and have some sort of stability as well. So I'll keep looking.
Yes. So we might turn to the next slide. Okay, so I want to end on a positive note. Okay, it's been a very tough year.
Yes.
And this chart just shows you what we've seen in terms of we had a collapse in business confidence, the blue line, and the red line is consumer sentiment. So that's essentially consumer confidence.
Yes.
And we've had a rebound. Then we had the virus outbreak in Melbourne. But what's important to note, see that green arrow shows you that both consumer sentiment and business confidence are back to levels they were before the crisis.
Wow,
and
that's impressive.
These are known as leading indicators. So they predict, well, they give some insight into the direction of the economy over the next 3 to 6 months.
Right.
And they suggest that the economy is now in recovery.
Okay.
So the recession is coming towards an end.
So you don't believe that the stimulus packages that end in March will have a significant effect?
They will have a significant effect on those people who rely on them. So the JobKeeper, the job seeker extra payments,
Right.
they will have a significant effect. And I would prefer to see that the government extends and makes the reduction in those payments much more slower
Yes.
than what they are doing.
Yes.
So and as I pointed out with the unemployment and underemployment rates,
Yes.
there's still a great degree of stress amongst many Australian households.
There is.
So governments need to be very careful about withdrawing that stimulus too early.
And what's the
However,
oh, yeah.
it's not enough by itself to derail the recovery.
Okay.
Yeah?
Okay.
And with a vaccine coming, that's another positive sign to say that this recovery should be sustained.
Yeah. Well, they're great. That's great words, Bob. I think that sort of fills me with a little bit more hope than I had a little while ago. Thank you.
Right. Thank you very much, Kathy, and thank you for everyone for listening.
No worries. Oh, you've got some more slides there. Do we want to sort of quickly?
Oh, that's just a summary of
okay. What we've discussed. Okay. Well, it's been wonderful. Thank you, Bob. And all the best. Have a wonderful Christmas. And this will get sent out before Christmas. So I'll go through compliance and get it all organised and send you a copy.
Great. Thank you very much, Kathy.
Lovely.